whoever is working and wanting to build a passive income on the side, you don't need to quit the job to do that. You can do it while still working and put in an additional 30 minutes a day learning how to research the markets, liaising with your teams on the ground in the UK. It can be done. Is it more work? Yes, it is. But that's the whole fallacy that people think I just do nothing and then I'll get there. That's just simply not going to work. A lot of other courses out there are like, oh, it's so easy. Let's just use AI, or let's just use the system that we've developed and you'll be a millionaire. Well, there's so many of them out there, right? Which is why there's a general sense of skepticism even in the space, even when I'm teaching our students, like when they come up, they first encounter us, they're like, is this for real, or is this another one of these scams or fake gurus? But after they spend some time with us and we share with them what we know, they're like, oh man, this guy definitely knows what he's saying. You get that sense of authenticity, sincerity quite quickly. And that's where I think their minds start to be open to learn and to see this for themselves. And I always tell students that there's definitely an acceleration. What I took 10 years to do, you could get there in a few years. Also because you are learning from my mistakes. You don't have to DIY and trial and error. I mean, you can, but it's probably going to take you way longer than if you just plug into something that we have discovered, we've refined over the years, and we are still doing it ourselves. I think that's the real benefit. And also, so many students have thought they found what they think are deals, and they bring it to us and they say, hey, take a look at this. I think this is a fantastic deal. Just one glance at it, and I'm not trying to be proud or anything, but because we looked at literally thousands of properties over the years, immediately in our minds, we know if this deal is going to stack up or not. Did the numbers work? Did you do the numbers wrongly? Are you investing in areas with poor rental demand? Or are you buying a new build that's way overpriced? You can get a property that's just around the corner for half the price. It's just ridiculous. And if we tell them that and they see it for themselves and point them to the data, the research, a lot of them realize like, oh my, why am I even thinking of buying new build properties, even though the developers and the agents say that the prices are going to double in the next 3 to 5 years. I think a lot of people bring the wrong lenses to look at property, especially in the UK, and they use Singapore lenses to look at it simply because passive income doesn't work in Singapore. And so people are used to buying property, hoping it goes up in value, and then sell it. But I think in Singapore, grown from third world to first, my dad bought a property, a HDB at $5,000. Now HDBs are millions of dollars. Are people going to think that it's going to go to tens of millions of dollars in the next, 20 years? It's very, very unlikely because we're more mature as an economy now. And in fact, the government has put in place so many cooling measures to ensure that the market grows at a stable rate, not too quickly, because then there's the risk of it coming back down in cycles. So my policy design, it almost is like a 2-3% growth is fantastic. And if it's too fast, they will put in more cooling measures as they've done more than tens of times. So it just blows my mind that some people still think that I buy a property in Singapore and it's going to rise in value by a lot in the next years. Yes, it has in the past. Is it continue to go up in value over time? Yes, it will, but not to the same degree as we've seen in the past, right? And at the same time, you're making a loss every single month because the rent can't even cover the mortgage in Singapore and big cities. That just was one thing that I felt, okay, it doesn't really work. Each property you buy, yes, there are some projects maybe in Singapore that would make you good money if you hold it for 5-10 years. But there are also those that have not risen, even though people have bought it for 10, 15, 20 years. So it's a bit of the luck of the draw, even though some of these might be in great locations next to MRT. It also requires a huge amount of capital to get started in Singapore, not to mention all the ABSD and TDSR restrictions. So then people start to look overseas, right? And maybe overseas property is better to invest in. And people might consider Malaysia, Thailand, Vietnam, Cambodia. These are kind of like maybe in one category where people realize that, yeah, the economy is not as developed. Properties are cheaper by Singaporean lenses and standards, once again, maybe 300,000-400,000 Singapore dollars. However, the locals in Cambodia and Vietnam are no chance that they're going to be staying in these properties because the average wage is maybe 500 USD per year. So you're looking to rent out to expats, which are then, it is a more risky strategy coming back to ordinary properties for ordinary people in times when economies go down, then the expats are sent home. And that's where you're going to get huge voids and you can't sell these properties. You can't rent out these properties. You're kind of stuck. So for me, maybe another huge insight, or belief that people have is they think I should get in because of the upside, right? But for me, the way to build a stable and safe portfolio is always to think, what are my exit options? Can I sell the property? Is there going to be a large majority of people that can buy or rent this property even when times are bad? And once again, coming back to Singapore analogy of a HDB, well, in times of where people are spending, then great, people are buying condos, they're upgrading. However, when people have to tighten their belts, people are downgrading. Nobody's buying a huge penthouse, nobody's buying a condo in a big city center. People are buying smaller units. People are might be even be downgrading to HDBs. I saw an article just in April 2023 of an expat that used to stay in a 2-bedroom in Marina Bay, and he downgraded to a 4-bedroom HDB flat. It just goes to show you the strength and the wisdom behind buying ordinary properties for ordinary people, because these are just recession proof. They will make money in every situation, every economic condition.